This interview is sponsored by ShakePay. It's the easiest way for Canadians to buy and sell Bitcoin. I personally use them as well as our guests here. So it's one of those plugs where I'm more than happy to promote because I think that they provide an excellent service. They've been very fortunate or very generous to actually supply 10 sort of swag bags, which consist of some ShakePay swag, as well as a hardware wallet. So basically, if you want one of those, comment below and tell us why you want a swag bag from ShakePay, and I'll pick 10 lucky winners. So thanks again to ShakePay. Go check them out. All right, welcome to the show. We've got a couple legends in the house. This is the all Canadian show. Three good Canadian boys here. So we're going to have a good conversation, really just about bringing some value. For those of you who aren't familiar, Jeff Booth has now been on the show. This is his third time. So third time's a charm. So Jeff, just kind of a little background for those who might not be aware of who he is. Coming a bit of a Bitcoin thought leader now. He's wrote the book, The Price of Tomorrow, which I'd highly encourage you to check out. It really is a must read. Really the premise on that book, Jeff will touch on before we get an interview. But Jeff his initial background was actually in real estate. So we've got some connection there, but transitioned into the technology space, got a strong background in that, obviously on several boards. So, thanks again, Jeff, for coming on to the show. And of course, we've got Greg Foss, growing faster on the Twitter space, spent 32 years trading high yield credit, and has again pivoted to what he now calls Bitcoin, the single best hard asset. So thanks, gents, for coming on the show.
Anytime. Thanks for having us.
Great to be here. Thank you so much for having us.
I just wanted to preface, so Jeff's book basically, I think, is kind of sets the whole macro framework for this conversation, which, again, The Price of Tomorrow. Essentially, Jeff, if I can dumb this down, correct me if I'm wrong, but basically the premise is that central banks have this 2% inflation target, that we are entering this exponential world where technology is inherently deflationary. It makes things cheaper and cheaper. We're obviously fighting debt and demographics, which I would argue are also deflationary. And so what we're seeing is, up until more recently, which we'll get into, central banks have, over the last decade, have basically been fighting this deflation. They have failed to hit this 2% inflation target, more or less. And so the result has basically been, well, let's just print the money and try to basically manipulate, markets and try to manipulate to get to this 2% inflation target. And so Jeff's book essentially argues that the premise is basically going to be, we're going to continue, the central banks are going to have to continue. They can't exit this game. So Jeff, I don't know if you want to correct me if I'm wrong. Did I miss anything there? I don't know where you are now.
Yeah, no, I think just if you start the other way around, technology saves our time. We use technology to give ourselves more value for less, and it is inherently just deflationary as a result of that. It reduces labor and it gives us more for less, and we use it, and it's moving exponentially, wanting to give us more for less and save our time. It's colliding against a system, that an inflationary system that we've known all of our lives. That if that happens, if that is allowed to happen, you would have a complete debt restructuring, but the entire market is debt. So what's happening is those two systems are colliding against each other. And just about every negative externality besides that, kind of as a carry on from that, social uprisings, everything, other countries failing, is caused by that fight today. These two systems colliding against each other.
Greg, I don't know if you have any comments on that.
So yeah, I will comment that Jeff's book is an absolute must read. I will shamefully promote it as being the best book I've ever read. And that's not because I'm a Bitcoiner. There's less than half a dozen pages dedicated to Bitcoin as the solution. It's about Jeff's experience in the entrepreneurial world, the lessons that he's learned. He developed one of Canada's fastest growing technology companies, struggled with the enormous growth. It's just a must read. But let's bring it back to the macro component that I find most interesting. In banking, commercial banking, a commercial bank only holds $4 of capital on every $100 of loan, which means the collateral that a bank holds, call it real estate, which is in your area of expertise, Steve, it's in the absolute mathematical priority that the value of the collateral goes up, okay? It inflates. Because when you only hold $4 of risk absorbing or loss absorbing capital on every $100 of loan, think of how fine the line is there if the value of the collateral falls by 6%. Well, how often does the value of collateral fall by more than 4%? Well, every economic cycle it does. But over the long term, if you can count on an inflationary environment, the banks can skate themselves on side. So inflation is a characteristic that the commercial banking system relies upon so that the collateral values end up rescuing the undercapitalization, if you will, of the commercial banking system.
Yeah, I mean, I think that's extremely well put. And I think that's why we're now in this very interesting predicament, right? Which is that we've got this, particularly, again, this is the Canadian show, Canada being one of the largest or most levered, developed economies in the G20, that you have a situation, and again, a lot of that leverage is in the private sector, in the real estate market, that you run into this scenario where it's almost too big now. You almost can't have a fall in the collateral. Like, the real estate is the bank's collateral.
The Fed is working hard for that, right, Jeff? And sorry to jump in front of you, but here's the reality. A couple of things. First, our friend Pierre Poilievre gave a stat today. He came out, and I saw it for the first time. Perhaps it's a dated video of a couple of days, where he says Canada's total debt to GDP is 371%. Which probably doesn't even include corporate debt. So I'm just assuming it's household debt. He based it on a StatsCan report. I have not seen that report, but assuming that number is correct, it's approximately what I assume is the global average of total global debt to total global GDP. So while Canada has certainly rocketed up there in the last couple of years, it is only coming to the average of the whole world, okay? And it's not a good situation. And on a macro basis, the Fed, which is the world's banker, will never be able to raise rates and strengthen the US dollar in the face of a global economy that is so levered to the US dollar and to debt itself. So yeah, I think this is where it leads to. Over to you, Jeff. But this predicament is mathematically impossible to solve.
Yeah, and when you have a currency that backs all other currencies, and we are all living on top of that manipulation, and that manipulation must transfer wealth from the middle class and poor to the wealthy at an ever increasing rate. And must, as a result of transferring the wealth, middle class and poor's wealth to their wealth to the wealthy, it must drive government to divide society, to try to take back that wealth from the rich. You can see the predicament the globe is in all over the world, and Canada is actually in some sort of sense protected, because when or not, and a lot could go wrong. It might be the first G7 nation to fail, but we have a bunch of raw materials, and when you do this type of printing, those raw materials rise in price as a natural offset. That being said, there is no way out of this. There is no way out from the existing system. because the world is interconnected, and and as countries start to fail, like imagine what would happen if Canada actually failed as a currency. What would the US have to do to backstop it? And that's what the US is actually playing in the euro dollar market as well, because if they don't backstop it, does China backstop it? Where does so you're entering into a period of time that we haven't seen in our lifetimes, that is the setup of currency failures all around the world, and was the setup for World War One, and then the World War, because that wasn't fixed, World War II as well. And that's what unfortunately we're entering in that time. And that doesn't sound very rosy, but it's mathematically certain out of the system that we're in.
Yeah, global. Just to touch on that, Jeff, Greg. So the global debt to GDP is 365%. I think according to the IMF, anyway. So Canada's, I think, 370. You're basically in line with global debt to GDP, but as an advanced G20, it's right up there. So it kind of puts us in this predicament. I mean, Greg, I don't know if you want to touch on the sort of the contagion effect, right? I mean, I think this is kind of your specialty, obviously. 32 years at the desk there.
A little bit, yeah. Credit is credit traders are pessimists, right? It's a tough business because generally you lend money at 100 cents on the dollar, and the best thing that could happen is the bonds go to 120, but then they return to parity because that's just a contract. But what's the worst thing that happens? Like you get zero. Like it's an asymmetric chair that you sit in. So you always joke that bondholders are pessimists and equity holders are optimists. Equity holders, oh my God, yeah, trees grow to the moon. Yeah, let's just make sure that this growth rate continues for infinite growth. Like, so it's a difficult chair to sit in. But firstly, credit is truth. Okay, credit markets always hold the truth. They're bigger than the equity markets. And I always look to the credit markets, and specifically the credit default swap markets, for warning signals on a given credit or a given entity. Certainly Lehman Brothers was forecast to fail far before any of the rating agencies got a hold of the reality. In the great financial crisis, the credit default swap markets were ringing the alarm way early. Structured product in 2008, 2009 basically showed that the rating agencies have no clue what they're doing. And Canada still maintains, so my heart is with Canada, still maintains a AAA credit rating in the eyes of S&P. It's a global debt rating agency, whereas the United States is AA+. So if you can actually wrap your head around the fact that S&P thinks the USA is a worse credit than Canada, go and explain to me how that works. But global debt metrics and all these other things, apples to apples, Canada is off the charts worse. Here is the kicker. In the credit default swap market, Canada is trading close to a single A rated equivalent credit. We are in big trouble, people, and we have management of our country that have no clue. Not only do they not have any clue, they don't seem to want to learn, because they say stuff like the budgets will balance itself. This is not what you want to hear when you are an international investor investing in any global bond that you want. Why would you put your money in the management of a country who says things like that, or I don't care about monetary policy? This is dangerous stuff. And I am not trying to line up the different parties. I'm just want to make sure that people understand we do not have a free ride here. And respectfully to Jeff, I don't think the USA would do anything to help us out, because the contagion, and this is what would start to be cascading all around the globe. It's like saying, oh, AIG is going to rescue Goldman Sachs. No. AIG is failing just as fast as Goldman Sachs is failing, and they're trying to put the fire out in their own house. You remember the rumor? If AIG failed, Goldman Sachs was done as well. I don't want it to be the day that Canada is the first G7 nation to fail, but the credit default swap market is telling us that we're winning that race right now. And then you look at other weak countries in the G7. Well, Italy and France, but what do they have? The European Central Bank backing of a group of countries that is way stronger than the Bank of Canada. So don't overthink this, people. This is not about wanting it to happen. The market is already charging us a default insurance rate that is reflective of the fact that we are the riskiest G7 nation out there. And you can't play with this stuff. This is capital market pricing that is not manipulated by any central bank.
You want to hear something wild? The Canadian federal government ran a budget deficit in 2020, 2021 of $334 billion, a $334 billion budget deficit. In the financial crisis in 2009, they ran about 34 billion. So just to kind of goes to show you the size of the basically the helicopter money that came from the sky.
And Steve, that's actually the point that I made in the book, because the book, $185 trillion in the last 20 years has produced $46 trillion of economic growth. And in what personal business could you add debt to your personal balance sheet at that rate and only get that much growth and expect to pay that debt back, and then get to that point and realize, well, I need to double it again, and I need to double it again, and each time getting less growth. At some point, you hit a wall, whether you're a person, business, government. At some point, you hit a wall. That wall is imminent. We are going to hit that wall, and and globally, we're going to hit that wall, unfortunately.
So that's true, because why? Argentina, which is a G20 country, has failed 4 times in my trading career. There has never been a 30-year bond that has actually matured in my trading career of Argentina. And let's not disrespect the bottom part of the G20 countries. There are 150 other countries below a G20. And so the contagion starts, and Jeff's great analogy, you never know which snowflake causes the avalanche, right? Eventually, though, the cascading impacts of all of these failed fiats will start a circular contagion, much like the great financial crisis. Remember, Alan Greenspan famously said in 2007, we believe that the subprime mortgage crisis is largely contained. Come on. That was 2 years before the bottom fell out, okay? And the markets, the equity markets rallied on that. Jim Cramer had his famous rant. The Fed cut their interest, their discount rate, and the equity markets rallied to new highs. What did the credit markets do? They got worse. So always look to the credit markets for what is actually happening in the plumbing of the financial system. Equity guys, again, oh, that tree, it's growing to the moon, and the Fed just provided more fertilizer. Sometimes that fertilizer does not work. It can actually kill the system.
Greg, I'd like to just kind of, because I think right now we're seeing this, so kind of damned if you do, damned if you don't. Right now you have inflation rates, real inflation rates, if you measured them with the 81 measure,
right,
15%. That's causing a whole bunch of voters to say, hey, what's going on? My food prices are going up, my house prices are going up, rent prices are going up, and it's all because of manipulation of base money. And so, so people are getting their pockets picked, and they're starting to wake up to this. So now the governments are trapped, and so the Fed came out today with Fed meeting notes saying that we are going to tighten faster. And you see the sell off of every assets, massive sell off, which will, and that's the point. If they continue to tighten, you are going to see a cascading collapse. And once that collapse gets away on you, it would take down every bank eventually.
Oh yeah.
It would. What would happen if that continued is the U.S. dollar would strengthen.
Correct.
Is it would be just like it's happening today, yields, because they're not doing as much intervention, still doing intervention, but yields would spike if they were true market yields, protecting you from the real risk of their yields would spike, which would take down the entire system. So you can expect at some point a massive liquidity. And by the way, that would start all foreign nations that price their debt in US dollars now are so offside because they can't pay back, and you'd start to see this cascading collapse, which would eventually take down the entire system. So you can expect at some point that governments are going to come in and massively inject liquidity to try to save this system.
We saw it in 1988. Sorry, Steve, I just want to,
No.
I was fresh out of college in 1988. And I worked for Canada's largest financial institution, Royal Bank, directly for the CFO. And lo and behold, one of my first projects was working on the Latin American debt portfolio of the Royal Bank of Canada. The Latin American countries had borrowed in US dollars, exactly the same situation that you're detailing right now, Jeff. Royal Bank of Canada was insolvent due to its exposure to LDC debt, lesser developed country debt, which is to say the price of the debt had fallen by more than the 4 cents on the dollar of capital that they held as risk absorbing capital. In fact, the debt had fallen 75 cents on the dollar. Now, Royal Bank of Canada wasn't alone, but you can imagine my dismay when I start right out of college and I'm like, this financial system is bankrupt? What are you talking about? Why do people have confidence putting their money and depositing their money in the Royal Bank of Canada? We know the answer. It's because they're too big to fail. And the government always is assumed to step in and print money, which they have over time. But the big picture here now is in this, we've kicked the can too often. The markets are calling baloney on the Fed put. They're going to force the Fed put. It's not going to be a 20% decline in equity prices. It then becomes a 10% decline. And it becomes less and less. It's like the addict that needs to run back to get the junk to make them feel better. And so 1988, 1998, long-term capital management, the great financial crisis, 2008, then the COVID response all adds up to a Fed that cannot possibly taper because the debt spiral ensures that they need to actually print money to solve the interest burden. Just the interest burden on the debt requires them to print money because the economy can't grow fast enough just to pay the interest expense. So it's so simple math. Jeff and I came at it from different angles, but the solution is always the same. You watch how long it will take. As Luke Gromen said today, he in a tweet, a beautiful tweet, he goes, maybe in the midterm elections, the Democrats are going to have to ask what is more palatable, 6% inflation, which incidentally is really 15% inflation, but 6% inflation or a global recession. It's only math.
I was just going to point out, it's funny. I was literally just going to mention one of my favorite follows on this topic is Luke Gromen, because I think I know you've coined the phrase "it's just math," but I think Luke's really highlights like the math, which is like it's an unsustainable Ponzi essentially. That I'm so surprised that people still have like sort of this faith and that everything could go back to normal.
Steve, you're closer to this because you follow it every day. We're closer to this. We follow it every day, and we're surrounded by some of the smartest minds in this. Lynell and Luke, some really great minds in this. If you take this out from our conversation, very few people are maybe that are watching your show. They're starting to understand that once you understand what Bitcoin is counterparty risk to that. It's a different system away from that. You start to understand it, but there's a lot of people who have no clue. A friend of mine is in building, really successful building company. He was over here last night. By the way, he bought on Shake Pay last night. But he he's one of my best friends. I see him all the time. He knows how close I am to the system, and he can't connect the dots. And so I gave him the Monopoly analogy, and I said, so you go around a Monopoly board and you collect the pieces, and they give you $200, and you get more and more rents over top, and eventually the loser, who's losing out at that same rate, either kicks over the Monopoly board, or the game ends because you have all the money, and you start it fresh again. And I asked him, what happens if the loser had no way out? How would they kick over the Monopoly game in the real game of life? What would that look like? I said, what would happen is if they run around the board and $200 didn't buy them their food or rent anymore, and then the government said, oh, I know what we're going to do. We're going to give $300 this time around the board. Right. And then they didn't get around the board again, and the wealthier got wealthier and wealthier, and the game couldn't end for the losers, and the winners kept getting wealthier and wealthier. What would society look like under that? And it finally clicked to him that he said, I have too much wealth in the existing system. It's going to blow up. I got to get out of, I need an option away from this system. And that's the truth.
And that's what Bitcoin is.
You red pilled him. I love it.
Well, no. That's what Bitcoin is. It's the put on the Fed put. It's what happens when the Fed put doesn't work anymore. It's a beautiful option because it has no time decay. And as Jeff said, there's no counterparty risk. And the most beautiful way of thinking about it is it's your insurance policy. You don't want the world to unravel, but if you believe in mathematics and you believe in probability analysis, you better have some insurance against it happening, because I don't see another solution as well, just like Jeff. And these guys who were Fiat jockeys, the reality is, I think we're making some really good headway, because even 10 years ago, most people didn't even know what the term Fiat meant. At least a substantial portion of the population does know what it means and has the intellectual curiosity to look through it. But I agree, education is key, Jeff, and it's amazing. But here's what I wanted to point out. The people that know that it doesn't work, and Jeff is probably privy to some of these conversations as well, I probably get 3 or 4 direct messages or emails a week that say, I'm a banker, I'm a senior banker at XYZ institution, and you are so right. The system is so broken. And I said, I know it is. It's not like, when I was in 1988, do you think as a 25-year-old kid, I was going to run out to the newspapers and torpedo my financial career with all the school debt that I had accumulated by saying, oh my God, the Royal Bank of Canada is insolvent? They would have said, okay, kid, come on, get off to your little insanity room. And by the way, you'll never work in finance again. After 58 years of life, I have to tell the truth. And the truth is, lots of people understand how broken the system is, yet they are conflicted and can't say it. The beautiful thing about Jeff is he understands that it's broken. He's lived it. He sees the solution, and he's a problem solver. Like, we can actually solve this problem. It is still solvable. And that's what's frustrating to me, is that people close their mind blindly because they're wed to the fiat system, right?
So, I mean, that's a good sort of segue, because I've had some of those conversations as well. And it's quite interesting, what they'll tell you once you're sitting down for a beer with them. These guys have sort of silent profiles online, but you grab a beer and they open up to you, and it is quite interesting. But that kind of brings you to, you said, like, the solution. I mean, what is the solution? Because I mean, at least in my opinion, or in my view, I mean, outside of some sort of like debt jubilee system, I don't see how this ends well. I mean, I know Luke Gromen talks about we're going to enter a period of financial repression, which is essentially, hey, listen, we keep printing, we basically mask price discovery by pinning bond yields to the floor, and we let inflation run at 5-6% with yields at 1 or 2. And you have these deep, real negative rates. Like, Jeff, I mean, how do you solve this?
That is a way. So that's how countries get out of this. Financial repression. but it assumes that's how the US got out of it in the 40s. You had financial repression. But it assumes you have one nation that control everything and other nations that allow that to happen, because there's negative externalities of that financial repression in trade all around the world. And so maybe, because this is a complicated topic for people, let's go back to 1971. 1971, the US's rates, tax rates in the 60s were up to 90%. They couldn't pay back their debt. Vietnam War works, and they had to abandon the gold system that kind of held accountable worldwide monetary policy, and so they had to essentially end Bretton Woods. Now when one country can manipulate, and that's why gold has always failed over the long term as a store, because if humans can game a system, they will gain a system. And because gold had to be centralized, the person who could centralize it could reprice it. And so gold failed many times as a hard currency throughout history because people would centralize it. Okay, so now you've taken gold out as a peg. US currency would have failed in the next number of years out of that if the US hadn't found another trick, another pony to ride. And effectively what they did is they priced energy, and they priced energy in the form of oil. And what it took is make a deal with Saudi Arabia and other nations to US oil has to be priced in US dollars. Now, if you didn't, you were excluded from the financial system of the world, or you were invaded. But that's the trick that took the US currency around the world, and drove a huge network effect to the US currency, even stronger than it was kind of pre 1971. Now all energy was priced in US dollars. Now, what that meant is the US could essentially print energy for free. They got free energy, and everybody else had to pay for energy. Rise of China. China low labor rate, and corresponding low purchasing, low consumer purchasing. On the other side of the ocean, US, high purchasing, high economy. China is growing over time, and China is growing essentially by giving vendor financing. They're buying US bonds to keep interest rates low, to be able to because if interest rates go up, US stops purchasing, economy fails. China gains more and more power, and their economy would need to transition to more consumer spending and away from exports, but they're driving down through essentially manipulating their currency. They don't want their labor to if their labor rises too fast, their jobs go away to somewhere else. And then in 2016, they stopped buying US bonds. And what would you do if you knew what Greg just said? If you were an individual, a company, or a government, and you knew mathematically that the US could not pay you back in real terms, what would you do with your money? You might go and put it into assets. You might, if you're in China, you might buy our real estate. You might buy rare earth mines. You might buy a whole bunch of things that couldn't be devalued by pressing a button. And so that global interaction that's happening today, and now China's a superpower. And funny enough, the more the US prints, the more they create the superpower. Because there's no one better off than China through this system that can't be fixed. They're taking that money from US taxpayers and buying assets with it all around the world. It is their Belt and Road. And so, but it's all connected. And now if it breaks, what currency are you going to trust? What global nation would trust the yuan as the backing for the world? Right? What global nation would trust any currency? Again, seeing what governments do for their own best interests first, would trust any fiat currency to again. And so that's what you, and that's actually why these long-term debt cycles typically result in war and revolution and war, because they get reset a harsh way through. And so if you just take that whole path, what's happening with Bitcoin is it's a peaceful path out of that. It's a different system. And as more people come to understand that system, if you wanted to use housing as an example in Vancouver, everybody thinks housing went up 36% this year in Vancouver. Well, it went down 25% in Bitcoin terms. And so what you're saying is the transition of Bitcoin being measuring the value of an economy differently, and it's transitioning over to a new network.
I mean, that's a good point, because, you know, I mean, I always say it to everyone here. I mean, whether you value whatever Vancouver housing, Canadian housing, whatever, in Bitcoin terms, it's actually getting cheaper. You know, if you measure it in gold, it's getting cheaper. So it's always about your obviously your denominator. But I mean, how do you see that playing out? And, you know, Greg, obviously curious to hear your thoughts, but how do you see that playing out in terms of, because we are kind of in this, we are in this inflationary fiat system that depends on this continued manipulation. Like, so if you just go to like this Bitcoin standard, for example, don't you just get like this like wave of deflation? Do you just get like a reset of
it won't be
like
immediate, Steve. It has to be a parallel system. And let's be real clear about what Jeff said. 1971 was a default by the United States. So don't ever tell me that the USA has not defaulted on a contractual obligation. Okay. I was alive in 1971 and they defaulted. Let's be clear in definition. A fixed income contract is a contract, a contractual obligation to repay, much like they were supposed to hold the gold on behalf of the world and they broke that contract. Okay, full stop. What is Bitcoin and what does it offer? It offers a store of value solution that is your savings account, while fiat can still be used as a checking account. We don't want to go back to the world of barter. We don't want to have to trade objects for objects. Fiat currency works well for global trade flows. It does not work well for store of value. So don't store your value in a fiat currency, the value of your time and energy that you have worked to store in a bank account. And I go back to my history. When I was 20 years old, I worked as an installer, a shingle installer, and I maybe made $40 a day cash, $5 an hour, 8 hours a day in the blazing hot sunshine. If I kept that $40 in a bank account and wanted to use it now, has my time and energy been saved or stored, preserved over that time? Oh my God, no. I might get a couple of hamburgers and a couple of beers, right? And that's not what you store your time and energy in. So other hard assets have solved this. As Jeff said, Vancouver real estate, very simply, is not going up. It's the unit of account, which is your fiat dollar, is going down at an accelerating basis. Now, there is certain supply demand considerations, as Jeff mentioned, some wealthy foreign money that's coming onshore of Canada, offshore of various other jurisdictions. But really, your unit of account, which is debased by over 95% in the last 100 years, that being the US dollar, will continue, because as we mentioned, the only solution to the fiat debt spiral is continuing to print more money. And as a credit guy, I can't not for the life of me understand why someone will put their money in a 10-year US Treasury obligation that you will likely, but not certain, get your $100 of principal back, earning 1.65% over the next 10 years annually, when the value of that $100 you give them at time zero will be debased by probably 50% over the 10-year time frame. What kind of contract is that? So you can call financial repression whatever you want. I would just say anyone who owns bonds, i.e. is the lender, has failed mathematics and is holding an asset that is guaranteed to debase. It's a fiat contract. So therein lies the problem in the system. Debt is no longer an asset. It actually becomes a liability to the lender. And that's horrible, which means they have to find another asset that they need to replace that, or at least hedge that. And Jeff and I both believe that that asset is Bitcoin. And Bitcoin, therefore, you have a parallel system. You don't want fiat to fail. Trust me, I don't want the Canadian dollar to fail. And if the Canadian dollar fails, the United States will probably fail within 10 years after the Canadian dollar fails. Neither is palatable to myself or my children. What is palatable is a solution that develops on a parallel basis where you can have your checking account and your savings account. And the two will in fact make the US dollar stronger in the long run as a global reserve currency, not global reserve asset. And this is what Jeff and I are working towards, to educate the people that there is this solution. A network transfer, right, Jeff, doesn't happen with a switch. You have to run two systems in parallel to make sure one system can take over for the next system. And that's the education process that I'm excited to be part of. Jeff certainly has done his best work with his book and everything. And all I can say is there's so many smart people coming into our ecosystem on a daily basis that it's my hope and it's my belief that we can solve this. We are very smart humans. We are at the top of the food chain for a reason. And the reason is we solve problems, but you also have to call out what the problem is in order to solve it. And that's what Jeff does so eloquently.
I want to touch on that, and this will be a question for Jeff, because I think you brought up some excellent points, Greg, which is in Canada, over the last 18 months, since the onset of this pandemic, Canada's M2 monetary base has expanded 23%. So essentially we've, over the last 18 months, we've essentially printed all loonies that are in existence by, it's expanded by 23%. Which to me is like kind of like it's almost like an indication of this like failing system. That's like governments trying to hold on to this sort of power grab, or this clearly this, you're trying to kind of keep everything together with duct tape. And so my question for you, Jeff, is how do you see these systems integrating? I mean, people, I think more so, I think the lazy people say, well, why Bitcoin? What gives that, a store of value? And one of the questions that we got, perhaps this will lead us to the answer. One of the questions we got from one of our listeners was they were asking, Jeff, what your thoughts on, you've talked about the internet protocol, and someone asked, you've often compared Bitcoin to the TCP/IP, which, for anyone that's a little bit confused, it's basically a set of communication protocols using the internet and similar computer networks. So, I mean, I don't know if you want to touch on why Bitcoin, how do you see that interacting? How do those two systems come together? We know, for example, that, again, we talked about the expansion of this monetary supply, but we know that central banks, including the Bank of Canada, are all actively working on central bank digital currencies. So you can see that they are actively aware that they are kind of losing control and they need to pivot, and they're trying to pivot with these CBDCs. So how do you see these parallel systems coming together, and why Bitcoin?
Okay, so I'm going to qualify this first and say, even though I was in Bitcoin before I wrote my book, and I'd bought more Bitcoin throughout the book, I was and am still wide open to any other path that could get us from where we are today to another path. The problem is, and I have looked at this from every possible angle, I think, and I continue to, there isn't one. That's why Bitcoin. And so I become, if anything, I become way more convinced on Bitcoin, but it is not from not doing my research. It is not. And there's a lot of people that look at Bitcoin without doing their research from the existing system, measuring a system from the system without any way out, and continue to stay, and they're making the problem worse. So that's really important to know. This, I didn't come to this lightly, and I don't spend my time on podcasts like this lightly. I'm not trying to get anything. I don't care, right? I care for my kids. I care for the same reason Greg cares. I care that there's a parallel system. Okay. So now with that, I won't be able to go into as deep kind of what people will need to do to understand it as deep as Greg would know, or I would know. But what I would say, there is no way out of the existing system. Door number one into deflationary spiral. It doesn't look like the deflation I'm talking about with human progress on technology has to be deflationary. Has to be. Because if we use the product, if it creates value, we use it. And we wouldn't use it if it didn't create more value. Right. So if you just think about that, all of what you do every single day is you look for more value in your life. And on a technology platform, where that's going with artificial general intelligence, robotics, it's taking away a whole bunch of labor that makes our lives better. The same thing is happening in energy. Reason you don't see it happening in energy is you're pricing energy through a fiat system that must make prices go higher. But the real rate is deflation is happening everywhere and an exponential. And the existing system has to offset that with exponentially more printing, which drives into exponentially more government control in the market, and every single thing being manipulated, and social revolution. That's what but door number one, stop it. We have not the good deflation, we have deflationary collapse, the entire system goes down. Door number two, keep printing. You have the haves getting wealthier and wealthier, the have-nots getting poorer and poorer. There's more of the have-nots than the haves, and they come and take it back through force, kick over the monopoly board. That's what's happening. Along the way, you have new dictators changing all rules of government to say it's those people's fault versus those people's fault. And the world distorts into, because we don't realize what's happening underneath us. We think the system's stable, and our minds easily get manipulated because we want to blame a person instead of a system. So we're easily manipulated through that system. That's door number two, and that's the door we're playing right now. Door number three is a path that is a transition from one system to another system, and that's what I think Bitcoin is. And but what people are looking at right now at Bitcoin, what they would be missing, is they're missing that they're measuring Bitcoin what it is today, instead of what a network effect makes technology look like tomorrow. So they're measuring, wait, this is hard to understand. What do you mean a hard wallet on my own bank? What does this look like? And it's like if a lot of people knew Amazon in 2000, 2001 would beat all retail stores. Very few people invested in it at $5 and still held it today. Because when they're just selling books, if all retail stores collapsed in 2000, if the dot-com collapse took down, say it reversed, and they were just selling books and you couldn't buy your groceries, life would be hell. As Amazon moves and it becomes easier and easier, and they're adding more and more items, then nobody cares if Sears fails. It just fails, and there's not even a bump. And so that's what's happening today in Bitcoin emerging, and what Greg and I talk about as a network transfer. You're seeing the value build as people are walking into a new system, And as they defend that new system and build to the new system, the system is getting better and better and better. I look at it like a bridge that we're all walking across. And as we walk across it, we build the bridge stronger and stronger so more people can walk across that bridge. That's what's happening. Now, when I use the Amazon example, Amazon was built on top of TCP/IP, which is a decentralized open protocol that anybody has access to. So billions of minds came in and tested and opened up innovation starting in 89 on top of the internet. But think of what it looked like in 89. Think about what it looked like in 95. And at that time, if you had predicted what was going to happen on the internet, people would have said, this is a joke. But the people that built on that open technology, all of those minds using essentially a technology that reduced the transaction cost a ton, built the new empires that stand today. Now, if you have, what would have happened is if those new empires were actually allowed in a system that wasn't inflationary, prices would have kept coming down as more and more innovation moved there. But with an inflationary system against that, the monopolies that are built on top of that open protocol with that network effect, you're transferring more and more power to those monopolies. They get bigger and bigger as they remove labor, as they do more and more of the business, and you use them every day because you can't live without them. And so you're driving more and more power into that type of game. TCP/IP, Bitcoin is like investing today in the internet itself. On top of that layer, HTTP, and a whole bunch of, on top of that layer 2 would be Lightning networks, and a bunch of different networks on top of that are now growing really fast, that are able to trade on top of that network, transfer. That's what El Salvador is using today as payment mechanism on top of those rails. And now you have two network effects reinforcing on each other. They're building more and more benefit to that base protocol. That will probably lead to a question, because a whole bunch of people are in altcoins. I am not at any of them, and I don't see the long-term value. But as a technologist, I do have to admit that because Bitcoin lacked smart contract functionality, it was optimized for security to keep it decentralized. And because it lacked smart contract functionality, an ecosystem built on top of Ethereum and a bunch of other coins that could do something different. What now with Taproot on top of Bitcoin, that ecosystem, I suspect, is going to move to Bitcoin and reinforce on top of something that has a base security, because you don't want to transfer a system of governance in Ethereum and all of the other coins. The way that they're built, you would actually just transfer wealth from this group who could make all the rules to a new group who could make all the rules. Bitcoin is different. How much wealth you have on Bitcoin doesn't matter one iota. You have no more power than the next person.
Completely decentralized. I mean, Greg, I don't know if you have any comments.
You know what, you learn so much when you just listen to Jeff, and it's you take it in. And here's the cool thing. I cannot add anything there, but I wanted to address the central bank digital currency that you brought up. And I will make a statement that CBDC, central bank digital currencies, are nothing more than digital fiat with surveillance. Okay. So interesting, Mr. Booth, you were at the Conservative Party rally because I saw you spent money at the restaurant that's on the path of the Conservative parade. Is this something that I really want? I'm not going to go there except to say, it's no different if it's digital or analog. Fiat is fiat, and it is programmed to debase. The beautiful thing about Bitcoin, don't overthink this. There's 21 million of them. Math and code, decentralized. Do some math, people. There's something like 60 million millionaires in the world. There's not enough for every millionaire to own one Bitcoin. You have a chance to go out and buy Bitcoin today, which in my opinion, at a price that is a rounding error to the target price I have for Bitcoin. Could I be wrong? Absolutely. But on a probability weighted basis, I believe Bitcoin to be the best asymmetric trade and investment opportunity I have ever seen in managing risk for over 30 years. Okay. Doesn't mean I'm certain, but you got to play the odds. And right now, the market is telling me that I am wrong. The market is giving my chance or my outcome only a 2% probability. And I'm like, okay, I'm not 100% certain it's going to my price target, but I'm far more certain than 2% probability. So that's how I've managed risk in my whole life. And I'm with Jeff. I want a solution. And so far, this solution is the best horse at the track. It's got 13 years of a network that has not failed. It's the world's strongest computer system. And if people ask you what you are buying when you buy Bitcoin, you are buying a piece of the network. You are buying the optionality that that network succeeds in the future, where this fiat system is guaranteed. The fiat system is guaranteed to fail mathematically. Bitcoin offers that solution. It's the best horse at the race. Am I saying that you should not own gold? I will just go and say this. Do not own bonds before you sell your gold. Sell your bonds before you sell gold. Sell your bonds before you sell your silver. Sell your bonds before you sell your house. Sell your bonds before you sell anything besides bonds, because they are the stupidest contract I have ever seen in 35 years. Oh yeah, and that's where I cut my teeth, in the bond markets. They represent the worst risk-adjusted return in the history of the 35 years that I've been trading bonds. Nobody in their right mind owns a 1.65% US Treasury yield when inflation is posted at 6.8% and really running at 15%. And people will say, yeah, but it's the safety trade.
Yeah, great.
That's not a safety trade.
And just to that point, and if we tie into some of these calls you're getting, I'm getting, and I get them literally every day. You do too, I'm sure. But senior bankers, fund managers, and the work saying, I'm mandated. I have to keep 40% of my clients' money in bonds. And so they're forced to, and that's the way that the model is. So they're actually they're ensuring their clients have more risk. And so what would happen in a world like that? What would if you were losing money at that rate in your portfolio, would you try to make it up somewhere else by taking a way higher risk? So what's happening to the world today, and you could say NFTs and everything else, people are just trying to escape the system. They're doing whatever they can to try to escape the system, and they're taking huge risk in doing that, because the rules of the system have everybody saying, no, you're going to have to get financially repressed.
So go ahead, Steve.
What's your is your opinion that, I mean, I've got my opinions, but I'm curious to hear your thoughts. Is your opinion that basically central banks essentially end up owning all of this stuff? Because I mean, I think everybody knows the grand example, like the Bank of Japan owns just shy of 50% of the entire Japanese government bond market. In Canada, you know, small bond market, as I'm sure you know better than anyone. The Bank of Canada now owns 40% of the federal, provincial government bond market in Canada.
Well,
where do you see this going?
Well, the interesting thing, and this is a bond in a debt spiral, a bond never truly matures, right? It has to roll over, because there is no expiry of that bond when the debt burden is growing organically with the interest coupon. So everyone can say this can go for long, and I agree. But listen to Rick Santelli on CNBC, one of the smartest pit traders that I've ever listened to. He says it's going to start with a failed auction where the international buyers don't show up. Okay. What does it mean? It means that all the debt that the central bank doesn't already own, in the case of Canada, the 60% that the central bank does not own, the owners of those bonds say, not only am I not going to show up to this auction, I'm going to, in between the auctions, start selling the debt that I already own. And that's when things start to cascade, right, Steve? It's all good. Everything is fine until it isn't. And that is the analogy I can only say in credit, that you're like, oh, you're sailing along, everything is just perfect, and you get that inkling that something isn't right. Well, it happens slowly, but then suddenly. And I don't want to see a failed bond auction, but that's how it happens. And then all of a sudden, the central bank comes out and says, we'll buy it all. And by the way, we're buying it all. And the way we're doing it is printing currency. So the money we give you is essentially, you can send it to the curb, because that's what happened in other countries. You see examples of that all the time. And they'll say they didn't have a US dollar fiat or a Canadian dollar fiat. It's irrelevant. It's all the same principles. The bond auction did not roll.
So I've got a question for you to follow up on that. Myself being in real estate, we've got a lot of viewers that, would come here maybe for the real estate side of things, but in that scenario, because there's a lot of people that argue today in today's environment where you've got everybody can clearly see this is probably the largest devaluation in modern history. Particularly over the last 18 months, if you've got inflation running at 5% today in Canada, I would argue it's actually much higher than that, as we've talked about in the show. You got mortgage rates at 2%. People say, well, hey, if the way out of this is print more money, debase the currency, how much debt do you want to be long? Like, so for example, do you want to be long a whole bunch of levered, Canadian real estate at 2%? Take out $1 million loan with the risk that, again, the risk is something fails at one of these, these bond auctions and yields spike, and they have to try to come in and print
spike.
and manipulate.
What would happen is it would stop, right? It would be like, it would be, okay, it's sort of stopped, and it's, you hate to say it, but famously in 2006, I think Chuck Prince, who was the CEO of Citibank, said, when the music's playing, you got to dance. And the question that was posed to him is, Mr. Prince, don't you think that this leverage buyout craze is going to come to an end? And it's a typical example of someone who believes that it's going to continue forever, right? So the answer is, if you have a leveraged property or a property that can use incremental leverage, to the fact that you can pure and simple still support it with cash flows and the income produced by that property, are you supposed to take out incremental debt to lever that property more? Yes, you are, as long as you put that incremental debt that you have incurred into another hard asset that will maintain its value in the face of a bond that is mathematically programmed to debase. So who's doing stuff like this? Michael Saylor, famously the CEO of MicroStrategy, is rewriting the rules of capital markets to be able to take a contract of which he owes other people money and says, damn, you guys are lending to me at the wrong rate relative to what I can put that proceeds of that bond issue into. And I think people can do the same thing with real estate as well. Steve, if you ask me, this person hates Bitcoin, but loves real estate, I'd say, okay, you're sort of there. The difference is, if the world starts to unravel, can you pick up your real estate and move and have portability, transferability, verifiability, all the things that Bitcoin offers with a property that's sort of fixed to the ground? And the answer is no. I am a proud Canadian, and I'm honestly thinking about leaving this country. And that pains me, but I'm not going to be able to leave with the house that I love. That's just the reality of different fixed assets. And, you know, they'll say, well, then there's gold. And I'll say, well, when's the last time the gold blockchain was successfully audited? And by the way, is the gold in Fort Knox really there? And how much tungsten is painted as gold? And, you know, look, I love the gold bugs. Why? Because we're sort of on the same page, right, Jeff? They get it, except they haven't gone to the perfect horse at the race.
If you just go back to gold is you just keep this in mind. If a system can be gained for some humans over other humans, it will be. Gold can be, because of the centralization, gold has to be. And also because gold can't have velocity like Bitcoin can have through technology, you have to build a credit system on top of it. And that gives the weight, and the credit system gets away on itself, and it turns into these long-term debt cycles throughout history because of the same thing, because you needed something to transact on top of it. And so when a lot of people talk about pegging a dollar to something, like pegging to gold, they're really talking about pegging a credit market instrument to gold, because you have to have something on top of it. And that credit instrument has to grow through inflation forever, because we will always choose, us humans, you, me, everybody else, will vote for people who tell us they can give us more than they can. It's wired into our brains. So we will vote for people who say, who will always defer the pain and make the pain bigger. And that turns into the long-term debt cycle that we're talking about throughout history, and it gets reset through war. Bitcoin is a difference instrument. It doesn't need to be pegged to anything, because it is the peg. It is pricing energy, is what it's doing. So yeah, I want to actually make a real important point, and I think I've made it on the show before, Steve, but it's just what Greg says: when the music stops, there's a whole bunch of people that think they are secure in their job or otherwise, that everything else falls apart too, and they don't see the cascading fall apart. So in Bill Direct in 2008, you could see this running up, but I didn't actually realize how tied this was at that time. And we had letters of credit with corresponding banks all over the world. We had and so we had tens of millions of dollars effectively in transit, or millions of dollars in transit with corresponding banks. And our containers sat at the ports for 3 days because no other bank would trust our bank. And we thought we had the money, but no other bank would trust. And so that contagion, you knew the TARP would come in, you knew that the government would come in and bail out the entire system. And in bailing out the entire system, also ruin a free market forever. Because when people know that, when the worst offenders know it's a one-way ticket, they can't lose, or you encode that essentially manipulation into the system, because as a hedge fund or Goldman Sachs, I know I have a one-way ticket. They're going to socialize losses every time, because the system can't fail. But at that time, our containers were stopped all around the world. And you don't expect, I didn't expect, because I thought, oh, we got lots of money, our business should be really good. And it hit us from like, what? Our business just dropped by 50% and all our containers are frozen around the world. It's a big deal. So now, if that cascading collapse were to happen, is your income safe from what could happen? And now if you're levered everywhere in real estate, and you have this massive debt in real estate, and it can't move, and prices fall, you could be completely wiped out.
Yeah, no, that's a good point. Because Bitcoin's basically this trust network, right? And so my question to you was, just losing my train of thought here, but you've got this trust network. I mean, just trying to think. Greg, I don't know if you have any comments here. Save me.
So, sure, trust. Okay, so that's exactly what it is, but what are you trusting? You're trusting mathematics and code. The mathematics is the base layer of language. You need to understand that this is not controlled by anybody. Therefore, that implies trust, that you won't get rug pulled. You won't, the system won't collapse on itself because no one can make it collapse on itself, right? And so again, I just have to advocate this, and Jeff feels the same way, I believe, because he's said this. Neither Jeff or I advocate 100% exposure to Bitcoin. That would be irresponsible. You, though, need to own more than zero, because if you actually own 0 Bitcoin and it does become the platform or the standard, you have cost yourself the opportunity to keep up with the trust. There's a new system of trust. And this system, which I believe, as I've said, is the best asymmetric return opportunity, because if it does become the system of trust, it becomes the system that prices energy. And once it prices energy, it replaces the US Treasury securities as global reserve assets. And by the way, do you think Vladimir Putin might be thinking that getting paid for his valuable natural resources in Bitcoin is a smarter way of transacting than getting paid in US dollars and putting those US dollars into US Treasury bonds? I'm pretty sure he is. And so all I'm saying to people out there, get off 0, right, Jeff? And don't, I'm not telling you not to go to 100 if you are that you have that level of conviction, but I don't, because it's not the way I've ever managed risk. I'll just tell you, though, that it is a substantial portion of my portfolio, and I'm happy about that. And the price has come down, and you'll hear Peter Schiff running around celebrating that it's come down from 67,000 to whatever it is now. And I'll still look at Peter Schiff and I'll say, it's still a rounding error, my friend. And yes, you did miss it at $10, but it's probably better value today, right, Jeff, than it was when you could have bought it at $10, because ultimately both prices are a rounding error in the context of where it can go.
I just add to Greg's there. Get off 0, but also get a hard wallet and self-custody. Get it off an exchange and self-custody. Learn, put a small amount in. Just learn what the process is. Because when this there's a lot of exchanges or others that will probably be building credit market type of instruments on top of Bitcoin, and they won't be fully covered. And when this starts to run and everybody needs their Bitcoin, you're going to see who's standing naked in the ocean, right? The old Buffett quote. There's going to be there are going to be people that are going to fail, and people are going to want to make sure it's theirs. So make sure that you put it in a hard. Make sure you get off 0, put it in a hard wallet, get it off an exchange.
And just so to summarize that, a plug for our sponsors. So what you do if you're Canadian, you would go and you would set up an account on ShakePay, super easy, mobile friendly. It's all in the mobile app. You set up an account. You can just e-transfer right to ShakePay. You buy Bitcoin on ShakePay, and then you would then transfer it. Even the owner, Jean, God bless him, he would tell you to then transfer that off of ShakePay onto a hard wallet. And then you obviously store your hard wallet as you see fit. So that's kind of but Jeff, getting back to, I was drawing a blank there earlier, but my it's come back to me now. We had this conversation, you and I went for lunch maybe about a year ago. And I just remember, because I know you're obviously deep in this space, and you're like, oh, it's going to be, you mark my words, it's going to go on, balance sheets of these massive corporations, and it's going to be, you talked about game theory, which you were like, it's going to, one country is going to adopt it as like a currency, so to speak. And it's funny because a lot of this has actually come to fruition. We've got El Salvador, which has obviously made that legal tender. We've got Michael Saylor, MicroStrategy, Square. I mean, there's a couple other large publicly traded companies. I mean, do you have any update for us? I know you can't say too much because you're kind of, some of these conversations are, behind closed doors, so to speak, but is there any sort of insight that you can give us into your vision in the next 1 to 2 years, of even 3 years, of where this is going?
So at a high level, I'm doing this for a different reason than money. People are going to make incredible wealth on this system, but and I know a lot of your listeners will be thinking about the money aspect of it. How do I protect my wealth? If you just think about all of your wealth or your time, when Greg says your time is getting eroded, that's what's happening. We don't actually want more money. We want what the feeling of more money gives us in our lives. We want more time, right? It's an abstract concept for our time. And so when that money is manipulated into an existing system, if you have manipulation in money, you must consequently have manipulation everywhere in society. And if the only way to get out of that manipulation is to manipulate money greater, you must have more manipulation in society. And the human condition won't see that, because it's not something we think about every day, and we're living in that system. What I care about for my kids is a system that doesn't look like that, because I know it's really easy to see what the world looks like and what will happen next and next and next from a system that is based on a fraud. It's really easy to see. And so that the book and all of what you're saying are predictions. It's really easy to predict the future when you understand the game you're playing. What's happening with Bitcoin is it's a new game, and it fixes the incentive structure of the world, and incentives matter, right? If you think what you'll do first for your family is you'll protect them, and then you'll protect your friends, and then your neighbor, then your country and everything. And that the way we think about trying to get our slice of that money so that we can eat first, and then our family can, and then our friends, the way we think into a system that's manipulated has every man for themselves, trying to gain more of a corrupt system. An incentive system that fixes that means and I've said this on a couple of podcasts, but you could yell at Bitcoin all you want, you could hate it, and it still benefits you, because it fixes the incentive structure of the world. And what that means is prices that should be going down keep going down. Prices go down forever. And so you need less to be able to live in that system. So you could hate it. You might not participate in the gains from it and the wealth gains, but you still benefit. Humanity still benefits, even if you don't. If you yell at it the entire time, because your costs go down.
Yeah, I mean, it's a hard thing to kind of wrap your head around. I mean, just because like I'm so used to this inflationary system, right? You're used to
a totally different system. It's diametrically opposed. But that's actually why I don't get why everybody can't see this. Just ask yourself, does technology save our time? And are we 100%? And are we going to stop using technology tomorrow?
And Steve, the good thing is there are people, and Jeff's education is permeating the highest levels of some various governments around the world. I do know that I personally have given a presentation to 45 members of parliament of the Canadian government. They were all with one party, but nonetheless, they were educated. Their questions rather were very smart, meaning they had done the research prior to coming to the session, and they are continuing to make that education available within their own party. Jeff has given, if I'm not mistaken, Jeff, you've talked to some European governments or some European committees.
Central banks.
This is all so positive. From the, you look at Cynthia Lummis in the US and senators, and it's a process, guys. It's not easy. And sometimes you look at the price of Bitcoin too much. Over time, the price going down from its recent all-time highs just allows the people that need it most to get it at a price that allows them to accumulate a higher percentage of 1 Bitcoin. If you have 3 children, I suggest in your head, you try and achieve a certain percentage of a full Bitcoin for each of your children. And if you're wealthy enough, then perhaps you get them 1 Bitcoin each, but don't leave them with a 0 Bitcoin and a legacy in the financial system that could collapse because all of a sudden your banker, who's been your banker for the last 100 years, decides they are not accepting the counterparty risk that is the letter of credit that Jeff's company was susceptible to. So counterparty risk is the risk in the financial system. And when people stop trusting, you brought that word up again, when they stop trusting their counterparty, that's when things fail. And that's what we saw in the great financial crisis. Lehman was going down, but Bear Stearns was also going down. And imagine if you had protection on Lehman Brothers, but you had bought it from Bear Stearns. That's the counterparty failing, and there is no backstop to that. What is the backstop? Something that has no counterparty risk, defended by math and code and the strongest computer system in the world. I don't understand why people don't get it either, Jeff, but we'll try and educate, right? And Steve, thanks for that education process, because people who own hard assets are part of the way there. They really are. They understand intrinsically that you need to transfer your time and energy that is being stored in fiat. You need to transfer that to something that will store value over time and space.
No, I think it's incredibly valuable. I mean, Jeff, one of the questions that we had from one of the people there on Twitter was kind of goes hand in hand with the whole trust network. Someone was asking your opinion of what we're sort of seeing with, not to get political, but with all this COVID stuff and the authoritarianism around that. Does that interplay, in your opinion, with Bitcoin and the fiat monetary system? Like, do you have any opinion there?
So what would a system look like that required government to do everything and required that totalitarianism? Like, what would a system look like in individual rights and freedoms? Would it look more like China than you're used to? Of course it would. By transferring power to government and government making all the choices, they can't outrun. So we are all prediction markets. Every single decision you make, why you decide to buy something and you spend more money today because you really want that, versus so tomorrow you'll say, oh, I'm going to wait a month to buy it. Or why do you buy a house? Or we are all prediction markets. And there is no way to take a central authority across every one of our individual needs and say, these people are going to do this versus this. It's impossible to predict that. But when you give more and more power to government to say, we are going to make the market. So what you talked about in Canada owning how much of the bonds, when we look at this essentially a centralized society and government, what they're saying is we make all the rules. And when people rise up against those rules, they shut them down. The people that are the edge cases, they shut them down. And you concentrate more and more. I would rather, one of the things, and I think you saw this tweet that I put out, is that if everybody that was marching on the streets just went out and bought Bitcoin, that game would be over tomorrow. They would get their individual rights and freedoms back in a different way, and governments would be forced to be able to deal on people's terms rather than government's terms. But when you go out and march on the streets and you burn down properties and you go and steal, you actually give the government more power, because they print more money and take it from you to hire more police forces to drive to drive a wedge between society. You're actually driving the same thing, but humans have done it over time, over and over and over again, across time and space. And so it is all connected. I try to stay out of the fray of all of these connected things and just realize, yes, there's some really evil people in the world, in all systems, but they're mostly good people. And around the right incentive structure, you would see the best in humanity versus the worst in humanity. And so what's happening today is you're seeing more and more of the worst. And if you've been listening to CNN your whole life and you think that it's the Republican Party on one side, or if you've been listening to Fox and you think it's the Democrats on the other side, and both parties are printing money, and most of the taxes are totally irrelevant. It's most of the revenue is coming from stealing money from people. And no politicians are saying that, and no media is saying that on top of that. And if you see through that lie and it's exposed for you, and your whole life you believed that it was solvable from one of those parties, what if you knew that was a lie and you kept hearing it all the time, what other things might you think are lies too? Right. And so what you're seeing is when I said manipulation of money means manipulation of everything, you're seeing society rising and saying, if I can't trust that, if I can't trust money, and I keep hearing this nonsense, what else am I being fed a bill of goods on? What other stories aren't real? And you're seeing societal breakdown everywhere because of that.
I mean, I think it's a good point. I was actually at Real Vision's crypto conference last month, and one of the speakers there was Pippa Malmgren. If anyone's not familiar with her, her and her dad both worked like alongside basically the U.S. presidents over the years, and so her kind of views, she's now like deep in the technology space and AI and robotics and all that stuff, and obviously politically connected. But she was just highlighting, like, we've talked about central bank digital currencies, and she's like, listen, it is going to this like surveillance state. Like, this is where it's going. They are going to try to release this, and it is going to be tracking your every expense and where you were, and they'll track your phone, and it is going to this sort of large, bigger government, centrally planned economies. And I mean, it's a slippery slope for sure.
If the world looked like that, which it is on that track, and remember, when this is probably more when Greg says get off zero, where I say get off zero and get in a hard wall. If you don't want the world to look like that, stand up and get off zero, because that vote is voting for a different world. And it will consolidate the way that you're talking about. It will consolidate, and it will keep it. When you think about CBDCs, what they are, that's exactly right. It's surveillance disguised as money. And how many people would stand up against that type of force once it looks like that?
Jeff and I were both lucky enough to give a presentation at Bretton Woods, and Pippa, if I'm not mistaken, well, I do know she spoke there, right, Jeff? And I just happen to have the book that I got from the Bretton Woods conference, where I made my own notes. But I was blown away by some of her revelations, if you will, and I'm like, wow, like, I think I say stuff that'll shake the world. This was stuff that will blow you away. And you just need insurance, guys, ladies and gentlemen. You just need insurance, because ultimately there are bad actors out there. But I'll agree with Jeff. The world is by and large full of good people. And this is why I love the Bitcoin community so much, because I think that people are working to improve the world, not just through a monetary valuation of an asset they own, but in terms of how they can share the knowledge, share the technology, and make the people who are less privileged than ourselves, the 4 billion people in the world that don't have a bank account. No one talks about them that much, except you hear professors of endowed chairs saying, I don't want it to succeed. You just have to make the leap. Oh, so you're saying you don't want 4 billion people in the world to have access to a store of value that can ultimately change their lives. And, you just have to look at the extremes, and that's why Jeff is an ambassador for the Bitcoin platform, a great ambassador. But look, if something better were to come along, I 100% am certain that Jeff would say, this is the better horse at the race. But there is something called a network effect. It's like, it's been there for 13 years. Guess what? I'm going to start the Foss coin tomorrow, guys, and I'm going to just have 1 million coins. And by the way, Jeff and I are going to be the two nodes that transact these coins. And do you think the security of that network will allow people to put any value on my coin because it has more scarcity value than Bitcoin? This is what people don't understand. It takes, Bitcoin has been there for 13 years, has been tried to be attacked and hacked and all the stuff. And yet people will always look at the other side and say, oh, what if this, what if that? Well, that's true, but play probabilities, not what if bad things can happen, what if good things can happen? And that's what we think Bitcoin can offer, right, Jeff? This solution that allows other people to benefit, much like Jeff and I have benefited from a system that has allowed us to accumulate an amount of staying power or energy or time that will help the community build this solution as a parallel system. And that's why I'm bullish. I don't want the Canadian dollar to fail. I promise you, my granddad and his great grandfather didn't fight wars for Canada to allow the nation to fail because of mismanagement of our currency. That is not what we want. We can help solve that. By the way, it will also make Canada a stronger player on a global stage because of our natural resource wealth, right, Jeff? These things priced in Bitcoin allow us to store value for our children and make a great country even greater. So it's hard to be too negative. I mean, we come at it from a negative angle, but we have the solution that turns it into a very positive outcome.
Yeah, and I would, in anything we say here as well, the whole Bitcoin network, it's an open source network, and so it's don't trust, verify. So anything we say, don't trust it, verify it. I just have not seen another path that I would be willing to endorse out of this system that we're in, and the existing system is going to fail miserably for our kids. And I wrote the book specifically because I knew that, and then looking at what type of paths could we get an incentive structure for the world on that looked better. I only come up with Bitcoin. Now, to that point, don't trust, verify. Maybe I'm wrong. Maybe it's something I don't see, but I spend a lot of time here, and I'm not doing this and I'm not trying to do this to fill my bags on Bitcoin, because I don't care for that. I could care less from my personal wealth on Bitcoin. I've been fortunate enough, and I'm still very fortunate, that I understand technology and how fast things they're moving. And I understand human nature and what typically people say they do versus what they actually do when given something different. And that allows me to create tons of value in technology companies. If I could say for a bunch of your listeners that have kids, get them to start learning about this network and the Lightning Network and everything that's happening here. You want a position that will give them outstanding value creation for society. Get them to understand where things are moving. There is an entire ecosystem. It's like, I can't believe how much things are going to change, but it's like knowing that the internet was going to exist, and you invested in the internet itself in the beginning of the internet, and you knew you have a playbook for how that's gonna roll out. I don't know why you wouldn't spend a whole bunch of time there learning at a deeper level.
That's fantastic. And I think just one last question to sort of wrap it up here. I mean, it's a question for Jeff and Greg, I guess. Jeff, maybe you can start first, but in your opinion, we've talked about everything that's going on, the system, obviously, particularly in Canada, again, the Canadian show, you're really dominated by, let's call it 5 big banks. They want to maintain a legacy system. In your opinion, I mean, I think Bitcoin is inevitable. Do you have an opinion on when the big banks sort of begin to adopt Bitcoin? Like when do they start trying to grab their piece of the pie and opening up custodian service, or a shake pay competitor, so to speak? Like, do you think that's coming soon? Or is that like they'll fight tooth and nail to not do it? Or do you have opinion on that?
By fighting tooth and nail against it. Now they're kind of, it's a checkmate, and this is going to happen slowly, then all of a sudden. But by fighting tooth and nail, they block themselves from participating in the network. And because of game theory, other people will do that, whether it's other banks within Canada or other new fintech startups within Canada that emerge into banks. It doesn't matter, because if there's a demand for something, and just think, just at the very simplest level, think about the transaction cost of a bank and all of the people in the bank to be able to, on all the fees. And in Bitcoin, there's none of that. And I can trade individually with, if you want to send me an invoice right now on Blue Wallet, I could pay you right now, and it would come with 0 fees. And so how is that stopped when you open up a wide open decentralized monetary network that is global in nature? And 2 months ago now, I did a high 6-figure wire transfer to India that was lost for 3 weeks, that my bank didn't know where, and they were raising tons of fees to be able to pay my staff in India. I could just pay them directly. I could bypass the entire system and nobody can stop me. And so I'm not saying I'm doing that yet, but that is what's going to happen. And more people interacting this, putting this on their phone and understanding, wait, why am I paying all these fees? If a bank says no, somebody else will say yes, because it's a free market. And if a big institution says no, then you will do it yourself, and I will do it myself. And it's what ends up happening with technology. What monopolies think they can stop technology, they can't, because the many that are benefit, that are locked out of the monopoly, are now in power because they use it and they bypass the monopoly. And so banks could say, I'm going to stop the many from doing this, but they do it at their own peril.
Greg, any final thoughts?
Yeah, wow, great. And so I'm a small business owner in Montreal. I'm a partner in 8 Irish pubs, and I want to tell the story about, I think we're pretty good operators. We have an EBITDA, or a pre-tax cash flow operating margin of about 14%, which means on every dollar we sell, we make a profit of 14 cents. If someone takes out their credit card to pay us, we have to pay a merchant fee of 2.5 cents on that dollar. So our profit margin, right, goes from 14 cents down to 11.5 cents on that incremental dollar. Well, we're considering, and we will implement, a Bitcoin payment rail in our pubs to try and arbitrage away that 2.5 cent commission that is charged by the Visa or MasterCard, the merchant fees they're called. So I assumed that globally merchant fees were similar until I talked to my friends in El Salvador. They'd informed me that merchant fees on Visa and MasterCard are 8%. So imagine if you're a really good operator in a restaurant in El Salvador, or a third world or lesser developed country, and your 14% profit margin gets halved just because someone takes out a credit card to pay. Do you think there's incentive for those merchants to adopt a different payment rail? And I'm taking it a little bit further away from the banks, but ultimately it all comes back to the banks. When are the Canadian banks going to accept and realize that they have to get in the Bitcoin game when Goldman Sachs comes to Canada and starts taking all our high net worth individuals who are the most valuable banking clients away from the Royals and BMOs and Scotias of the world, because those people want to protect their wealth as well. And are they all going to do it? As soon as one of them do it, because that's what happens in Canada. None of them will do it, and they'll all hide their head in the sand until somebody starts doing it. And I lived this in the high yield credit market, Steve. I started at a firm called Midland Walwyn Capital, trading high yield bonds in Canada using Midland Walwyn's own capital to provide liquidity to the markets. And eventually I got big enough that the big banks noticed, and I got hired away to TD Securities. And as soon as TD Securities started trading high yield bonds in Canada, so did RBC, and so did BMO, and so did all the other banks, because they had to be competitive. And as Jeff says, they will resist it until someone else comes in and changes the rules of the game. Sending wires internationally is absolutely prehistoric technology. You'd think it was their money you were sending. And by the way, if you make an error in the address, it's your fault, not the bank's fault. And it's just the most antiquated way of sending value across the world. I can send it on the Bitcoin network. It'll settle in 10 minutes to an address, and it's verified on an indestructible ledger. God, I love that. The wire transfer system is absolutely broken. It's painful. I sent money to an Aboriginal tribe in Australia, one of the first Bitcoin transactions I ever did. I sent $750 worth of Bitcoin, which is worth quite a bit more now, and I'm happy for them. Settled in 10 minutes. If I had tried to do that through an international banking system, I guarantee you it would never have settled, because they did not know the client, KYC. Oh, it's got to be some sort of fraudulent organization. It's my decision to send money to donate to an Aboriginal tribe on the other side of the world, and it settled it in 10 minutes. I love the technology. Other people will too. God bless Jack Mallers for helping out El Salvador, and a country of 6 million citizens, of which 3 million don't have a bank account and get raped by Western Union every time they try and go for remittance payments. Guess what? Western Union's gone. See ya. A great short trade. Buy put options on Western Union, or better still, short Western Union stock, or even better, just understand that as a $6 billion company, they're a rounding error. They will have to adapt, or they will vanish. And Canadian banks, I mean, they're not small like 6 billion, but they're not untouchable either. So it's all part of this global shuffling of wealth that they take their fees, where Bitcoin brings it down to its most perfect low fee transaction, right? No counterparty risk, efficiency, and changing lives for people at the lower end of the spectrum. So can't say it any better. The Canadian banks ultimately will adapt when the rest of the world does, and unfortunately they may be too late. I would really
Greg,
love
that point, why you're getting so many calls from senior bankers and fund managers is exactly the same. They're being forced to put people into 60-40 plans.
Yeah.
And a bunch of the high net worth people are saying, I'm out. I know Greg Foss says this is a deteriorating contract. I know I'm losing money on it. He's right. I can see the inflation rate. I can see and there's more risk than just that. Why is my banker forcing me into this? And those people are finding other banks that are telling them the truth, or finding other exchanges that are finding the truth. And once that starts to accelerate, that's why all of these bankers are coming to us and saying, how can you get Royal Bank corporate on side to getting us onto Bitcoin as fast as possible, because we're going to lose our clients. That's exactly
right.
what.
And here's a little tidbit of information. We'll play probabilities. The banks are set up with committees generally. I'm very aware of one committee that a 5-man committee where 2 people of the 5 men, there probably were some women there too, the 5-person committee, 2 out of the 5 wanted to go hard into the Bitcoin square, and they were overruled by majority by the other 3. But guess who are the older people on the committee? And guess what the young people who are going to populate this committee going forward who see this? Some things take care of themselves. Attrition sometimes takes care of these old foolish committees or investment policy guidelines. These guidelines will change too, Jeff. Maybe not at every single institution, but there's a lot of institutions out there that don't need to own 40% bonds. Yeah. And those are the smart institutions that will garner more assets than the old stodgy institutions that line up with the 60-40 rule as well.
There you go. I think that's the perfect segue to call it. It's get off zero, and as Greg says, it's just math. So thanks a lot, gents. Thanks for coming on. It's been a great show, and thank you, ShakePay, for taking care of it. So
Jean-Amouy, McGill grad. God bless engineers, because engineers understand mathematics. So thanks for having me, Steve and Jeff. Great to be in your province. I noticed I have frostbite on my cheek here from today's skiing. So hopefully the weather will warm up a little bit.
I'm jealous. So I should be there with you.
All right, buddy. Thank you guys for your night, and thank you once again, Steve. You're a great host.
Thanks,
guys. Appreciate it.